and with me are Ritu Singh and Arundhati Ramanan. These are the top headlines from the startup space. Naspers own Prosus writes down its entire Byju stake worth $493 million to zero, attributes the decision to inadequate information on the ED tech firm's financial health, liabilities and future outlook.
Prosus, the largest shareholder in Swiggy, says the food and grocery delivery company's revenue grew 24% in the last calendar year. Swiggy's GOV grew 26% year-on-year. Its ever transacted user base also reached the milestone of 104 million at the end of December last year. The investor did not reveal any FY24 business numbers as Swiggy is IPO bound.
Fintech player Razorpay expanded its Money Saver export account for freelancer professionals. This feature will now enable freelancers to open a smart account in any country of their choice and accept payments locally via bank transfers on the Razorpay platform, all while benefiting from zero withdrawal fee.
IAN Group announces strategic partnership with iAccel Gulf Business Incubator, a startup accelerator under the patronage of Dubai SME. This collaboration is set to open up significant opportunities for Middle Eastern investors looking to explore and invest in the Indian startup ecosystem.
European Union antitrust regulators have said that Apple has breached the bloc's tech rules, a charge that could result in a hefty fine for the iPhone maker, nearly 10% of its annual global turnover. New EU probe targets Apple's new contractual terms, saying it fell short of complying with the Digital Markets Act. Those were the headlines we are tracking for you today. Our top story this evening, Dutch investment firm Prosus has marked down its entire investment in embattled edtech company Byju to zero, citing a significant decrease in value for equity investors. Ritu, you've been tracking these developments. Fill us in on the latest.
Well, Shruti, it's 22 billion to zero in less than 2 years, and now you have Prosus, the largest external investor in Byju's, writing off the value of its 9.6% stake in the company to zero, citing a significant decrease in value for equity investors. Now, over the course of the last 5 years or so, Prosus had invested $536 million into Byju's across multiple rounds, and it has now recorded a fair value loss of $493 million on account of these investments. A Prosus spokesperson, in fact, told us that the write-down was primarily because it had, and I quote, inadequate information on the company's financial health, liabilities and future outlook. Now, Prosus's move follows BlackRock, the world's largest asset manager, also recently writing down its stake in Byju's down to zero. It also comes amid a group of investors led by Prosus seeking to oust the founder Byju Ravindran and co-founder Divya Gokulnath from the company, seeking a change in management, revamp of the board and challenging its recently concluded $200 million rights issue in court. The company, as we know, is facing an acute financial crunch. It has had to resort to layoffs in the not-so-distant past, and it is entangled in multiple legal disputes, including facing bankruptcy pleas filed by several of its creditors. And amid all of this, you have now investors like Prosus writing down their investment to zero in what was once the most celebrated edtech company, valued at $22 billion at its peak.
Absolutely, Ritu. That's the latest on Byju's. Moving on, Tmrw House of Brands and Aditya Birla Group Venture has invested 125 crore rupees in Axel and Virat Kohli-backed Wrogn. Founded in 2014 by the brother-sister duo of Vikram and Anjana Reddy, Wrogn has been one of the leading youth brands in India in the casual wear space. And with this investment, Tmrw has added another millennial-focused fashion and lifestyle brand, making the overall portfolio of 8 high-value Indian fashion brands. To discuss the road ahead at Tmrw and Wrogn, joining me now are their co-founders, Prashant Alluru and Anjana Reddy. Prashant and Anjana, welcome to Startup Street. Prashant, let me start with you. Tmrw has acquired 16% stake in Wrogn, valuing it at around $105 million. First, can you confirm this, and will you increase your stake going further?
Yeah, thanks, Shruti and Ritu, for having us on your show. Pleasure to be here representing Tmrw. As you know, Tmrw is a house of brands that's focused largely on fashion lifestyle. And as part of our portfolio, we focus on young, next-generation brands that solve for the young India, whether it's Gen Zs or millennials. And with the Wrogn partnership, we have a iconic celebrity-led brand coming into our portfolio, which has established leadership not just in men's casual, but within that, within shirts, denim, and owns the premium end of the market. And that's what we think we were lacking in our portfolio. And with Wrogn coming in, we're quite excited to welcome both Anjana and Vikram to the next phase of the journey with us.
Sure.
In terms of the investment, Shruti, I think a large part of the investment is going primarily into the growth capital for the company. And we have a few small angels exiting the company, but both founders and Virat Kohli will continue to stay in the current model. And equally, we'll have a staggered path to buying out majority and buying out all the investors over the next 2 to 3 years.
Okay,
so that's the structure of the deal. And beyond that, I wouldn't be able to
so you can't confirm the $105 million valuation that Wrogn is currently at?
It's a combination of primary and secondary, and also the staggered path to majority. And hence, I think it'll be very hard to pinpoint a number for you. But I think the larger agenda here is to really take Wrogn from a current state of leadership, which is owning men's casual at the premium end, and make it a lifestyle brand which is both multi-category and also multi-channel. Will be available across wherever the consumer shops, whether it's D2C website, app, e-commerce marketplaces, and also scale their current offline and omni business. Equally, on the category front, we think the brand has established itself in shirts and denim and some parts of bottom wear. We'll continue to build that out and also think about women, teens down the line. So that's really the plan with the partnership here.
Prashant,
to get Anjana and Vikram, who've been very strong founders and also partnered with Virat as the brand scaled as one of the unique celebrity-led brands in the country, which is the core.
Prashant, before I go to Anjana, like I mentioned earlier, you now have 8 high-value Indian fashion brands in your portfolio. What is the big impact you hope to make in this segment? What is the big play here?
Sure. As you know, Shruti, as we've spoken to you in the past, our ambition is to build $1 billion house of brands over the next 5 to 7 years. And I think what Wrogn brings to us is the ability to build a 1,500 crore scale leadership lifestyle brand that owns men's casual, owns the premium end of the market. We'll also look to have other brands which solve for women, Western wear, kids wear, and other areas. But Wrogn in particular, I think, has been one of the very few, it's not only the top 5 digital first brands in the country, but it's also one of the few unique celeb-led brands that have cracked the code. The reason that's happened is because Virat is not just a brand ambassador, but he's an owner, he's an investor, and the brand's grown with the journey of Virat's own personality. And we'll continue to leverage that, and it'll be a breakaway brand for youth fashion in the country.
Anjana, quickly coming to you now, this dilution of 16%, like Prashant mentioned, some of your angels have exited. Tell me if you could give me a sense of the kind of returns they've got, and also, does this acquisition change your role at the company?
So, Shruti, I don't know the exact, first of all, thank you and Ritu for having us on this show. So the angels are all in the money by a good amount. They were all very, very early investors, so we've actually not calculated the ROI. But for us, what is actually exciting about this investment is the strategic partnership that Prashant and the ABG group are able to bring on board, and how we're able to, partner with each other to unlock, value to reach the next scale. So from that perspective, I think, we're very excited with the entire strategic partnership. From a continuity in terms of business, Vikram and I have founded this company and started, and I don't think, there's any change in that for the foreseeable future. Tmrw and Prashant have come on board as, great strategic investors that are enabling us to hit that milestone of 1,500 faster with all the leverage that they bring.
So, Anjana, Prashant, gave us a hint at that, but if you could elaborate on your scaling up plans, your D2C business, both online and offline, what are the targets that you've set for the near future?
Right. So, Shruti, when we started this business, we always wanted this brand to be a men's lifestyle brand. And with Tmrw coming on board, we'll be able to, actually go ahead and achieve that dream. So the idea to hit 1,500 crores over the next 5 years, is through expansion of categories. So like Prashant mentioned, whether it's teens, it's women, it's footwear, it's all the, supplementary, complementary categories that fit around the men's casual wear space is something we want to complete out. Other than that, I think, we're very excited about the entire D2C space. Tmrw has a brilliant tech team that they've built out. So, with a brand like ours, which has been built over the last 10 years, we've not actually explored D2C in depth. And I think, with Tmrw, we'll be able to completely, unlock value within that channel. And, when we started the business, it was always online, offline focus. I don't think as a brand, you can actually dictate to the consumer anymore where you're available. You got to be there available at the convenience of the customer. Since our offline strategy as well, the plan is to open about 500 stores over the next 5 years. and across your metros, tier 1, tier 2, tier 3 markets as well. And I think with the combination of both offline and online and, plugging into Omni, with
Okay.
multiple categories coming, this is the path we've laid out for ourselves to actually hit that 1,500 crore milestone.
Okay, Anjana, very quickly, one final question before I let you go. Like you said, you're hoping to touch 1,500 crores in revenue in the next 5 years. But if you could also take us to the current business growth numbers that you're seeing and any new offerings in the pipeline, what are you currently working on?
So the current year we're looking, I think with Prashant coming, the pressure's a little bit more in performance in terms of numbers, but we are aiming at about a 40%
Okay.
growth this year. But from growth, from new launches, actually, we have got a lot planned for the festive this year. We are also hitting a milestone with 10 years of Wrogn. So we've got a very interesting campaign coming up with Virat that will probably go live this festive. And as we speak, we've also just closed or launched an exclusive collection with Netflix. This is one of those few global exclusives that we've got where you actually see product translate from your favorite shows actually in our stores.
All right, we've completely run out of time. But Anjana and Prashant, many thanks for joining us on Startup Street and wish you the very best for all your aggressive plans there. Thank you.
Thanks so much. Thanks, Shruti.
With that, Ritu, it's over to you.
Okay. Well, Shruti, we're going to shift focus, if I may, to AI-powered sales intelligence startup OrbitShift, because it has raised $7 million in seed funding led by Stellaris Venture Partners' Peak 15 Search program. Now, launched just a year ago, it plans to use these funds to broaden the customer base and develop its suite of solutions. But for more on this, joining me now is Saurabh Mishra, the co-founder and CEO of OrbitShift. Saurabh, welcome to Startup Street. Thanks very much for your time here. Before we get to that funding, briefly tell our viewers about your young company, what you've set out to solve for.
First of all, thank you for having me in this program, Ritu. OrbitShift, as you rightly said, is a very young firm. We started in late 2022. And what we are trying to do is actually develop an AI-based sales platform for the consultative sales organization to help their sales team become more productive and effective throughout the deal life cycle. And we have already seen a phenomenal success over the last 12 months odd when we have gone commercially live with our clients. We have clients across continents, US, Europe, and the APAC regions, as well as our clients have seen phenomenal impact with what we are doing. So we're very excited about what we are building. More importantly, what our clients seeing with us.
Sure, but what sort of traction have you seen in these last 18 months, the pace at which business is growing so far?
Yes. So Ritu, we went, as I said, we went commercially live last year. So it's been under 12 months for us. We are already, while I cannot comment on our revenue figures, but we have 15 odd clients across the geographies. And many of these clients we are serving quite deeply, where we have 100% of their sales organization, which is probably a couple of thousand plus on our platform. And we are almost every month we are adding a couple of clients. So we are seeing quite a explosive growth at this point of time as I speak with you.
Okay, so coming to that funding, earlier you had raised about $1.5 million in pre-seed. Now you've got this $7 million seed funding. How exactly will you deploy this for your expansion plans?
Yes, so we have, so there are a couple of areas where we're going to focus on going forward. First and foremost is, given the traction we have seen with the clients, we would like to expand our go-to-market and increase our presence in the US market. So that's a big focus geography for us. And we're going to invest, right away there. To have our organization presence, sales presence there. The second area for us is the product portfolio expansion. So far we had our flagship product is Account OS, which helps our clients to get lot concrete intelligence about their customers and develop a great funnel. We are now expanding our product to go later in the pipeline, which is helping them to write the proposals, RFI, RFP responses, as well as drive this the content generation for better pitch material. So we are launching a couple of new products which are already in the pilot stage with the client, and we are going to accelerate that product development over the next 6 to 9 months.
So, Saurabh, what would all of that finally mean in terms of your revenue? I know you don't want to give a number, you said, but your model is subscription-based and you charge clients based on the duration of the deal and so on. We understand. Any projection you could give us as to what kind of growth you foresee from here on and if you're profitable yet?
Yeah, so I wish I could, but unfortunately, I cannot share with you numbers. But just to still give you what we are targeting, over the next 12 months, we would like to have at least 50 clients with us. We are already serving 3 out of the global top 10 technology services providers, and we would like to become the most preeminent SaaS, AI-based sales SaaS provider for them. We already, as I mentioned, already have 15. In the next 12 months, we want to at least treble the number of clients with particular focus in the US market. So that's what. That's what.
Treble the number of clients. All right. Okay, we'll leave it at that. Treble the number of clients and focus on the US market for your next leg of growth. Saurabh, thanks very much for your time here today. Pleasure speaking with you.
Thank you. Much appreciated for having me in the program.
All right, with that, it's time for us to head into a short break. But coming up, Eka Mobility gets second tranche of 200 crore rupees from Japan's Mitsui & Co. for EV expansion. That and more on the other side. Stay tuned.
Welcome back. You're watching Startup Street, and here's a CNBC-TV18 exclusive. NVIDIA believes that each element of the India stack can be accelerated with artificial intelligence. In conversation with Shireen Bhan, Shankar Trivedi said that India has a huge base of intellectual capital, and what India has done with the India stack is amazing. Another AI player, Uniphore, believes that India is becoming the AI talent factory for the world. Take a look at that conversation.
How receptive are governments at this point? I know that NVIDIA is having conversations with the government in India, and talks have been underway, but how responsive are governments to the idea of sovereign AI?
Extremely. I mean,
and is it more driven by national security, or what are the considerations?
I think security is I don't think it's national security from a defense sort of perspective, but it's national interest from your culture and your business processes and your local laws and so on and so forth. And what India has done with the India stack is really quite amazing. Yeah. And it's enabling all these digital businesses. And each element of the India stack can be accelerated with AI. Every single element, from the identity to the commerce database and the languages in between. So I think that's a tremendous opportunity then for startups to get engaged, for national laboratories to add value, and so on. So
Yeah, but when we talk about sovereign AI, and you talked about digital public infrastructure, and we've got that layer done in India, what else will it take to be able to build this out in the way that you just spoke of?
So, I mean, in India, there are two things. One is India for India. Yeah. So use the India stack to drive local implementation, local startups, both addressing the large consumer market, and the huge business side of things. Then there's a second piece, which is India for the world. And you think about, all of our global systems integrators like TCS, Infosys, et cetera, as well as the global capability centers. I think that there's 800 of them that we're involved in. All of them are creating value in India for the world. India has this huge base of intellectual capital, of technical skills capability, and the skills is growing exponentially. And we've been training over 100,000 people in India just since I was last there.
So Umesh, both those India, the importance of India and what you're trying to do as far as AI in India is concerned, and the change in business models that Shankar was talking about and how we're likely to see that play out.
So let's tackle the second one first, the change in business models. Look, we are seeing this across the board. Companies that have hundreds of thousands of employees and spend, millions of dollars, sometimes billions of dollars on SaaS software, we are seeing an upheaval in both of those economics. The upheaval of the software stack as we knew it. If you think about what gave birth to the SaaS revolution 2 decades ago, this was about a CIO saying, look, I have the budgets to spend on technology, but you as a company outside of my premise can build this software much faster, much slicker, so I'm going to use your software and pay you by the seat. That assumption in itself is being challenged because the same CIO now wants to develop an in-house fine-tuned large language or a small language model on their own data. And now with AI agents, that large language model is not just an FAQ or a frequently asked question area. That large language model is doing some workflows. So the need for the app becomes slimmer, number one. Number two, because the app was being priced per seat, now there are areas of the economy where number of seats are going to shrink because AI is making businesses more efficient. And so we are seeing a major upheaval and an economic shift that is occurring around us as we speak. The next few years are going to be a big transition here. And the companies that execute this well will start to report an increase in free cash flow or profitability in their quarterly earnings. And the other companies who don't do it, their stock price will be sent down. Now coming to the role of India in all of this. We ourselves, we were a company that was born in India, the IIT Research Center in Chennai. We went back last year and opened our first AI innovation hub outside of Palo Alto in Chennai, in the IIT Research Center. Because like Shankar said, for our customers, if Uniphore has to be their enterprise AI partner, giving them everything from the platform as a service, along with the applications where AI can be consumed in contact center or sales, they require us to scale really fast for them. And for us, the scaling is both the NVIDIA infrastructure, we run on a lot of the stack that Shankar spoke of, but also the talent. And there, India becoming the AI talent factory for the world, there is no doubt.
When we last spoke, you were targeting $1 billion. What's the plan on that front? And what about a possible IPO? I know that you've always said if the conditions are right, you will consider that possibility. Are the conditions right?
We've actually seen our growth accelerate in the last couple of years, and we're continuing to assume that to be true for the foreseeable future. And once again, going public is going to be it's not the destination. It's going to be a milestone. On our board, we have people like John Chambers. I want to build this company for a very long period of time. And so there'll be a time for that milestone. Once again, it's market dependent. There are stuff that we don't control.
In December 2023, Eka Mobility, Mitsui and VDL Group entered into a strategic long-term partnership that included joint investments of $100 million in phases, equity and technology cooperation. Mitsui & Co., a global trading and investment company, has executed a second tranche investment in the electric vehicle company, Eka Mobility Solutions, of 200 crore rupees. This strategic infusion of capital will be directed towards capital expenditures and working capital. Joining me now to discuss this further, Sudhir Mehta, the founder of Eka Mobility. Sudhir, thank you so much for taking time out and being here with us on Startup Street. This new tranche that you've gotten towards is going to be used towards capital expenditure and working capital, right? So can you elaborate on these plans? How will you use the funds? Any new products in the pipeline for you?
Absolutely. During the last years, we've been working on a slew of new products, many of which will be in the market in the coming quarters. We have a whole range of city buses, right, from 7 meters, 9 meters to 12 meters. We are working also on intercity electric coaches. And in addition, we are introducing our light commercial vehicle, which is completes the range as far as we are concerned for commercial electric vehicles. And all of these products will be in phases coming in the market during the next 12 months. And most of this investment is to create 3 facilities, 2 in Pune and 1 at Pithampur, which will be manufacturing these vehicles not only for India, but also for many export markets around the world.
Right, so lots of exciting plans there. And like you said, right, Eka is developing 7, 9 and 12-meter electric buses, intercity coaches and electric light commercial vehicles. Can you talk to us about where your order book currently stands? What's your manufacturing capabilities at?
So, as you know, there is a big push for electric mobility, not only in India, but around the world. Our order book on electric buses is currently about 1,000 electric buses and 5,000 LCVs. Our first products are already in the market, are running in Mumbai and Delhi, are very well received. We are also running a pilot with Uber in Delhi. So if you are traveling from in and around Delhi, you'll see our buses as part of the Uber shared services app. Now, in the coming year, we are looking to expand this not only for city buses, but also for intercity buses. And a lot of the investment will go for that.
All right. So lots of investment going in that direction. But, what about revenues? Where are you currently at? What are you clocking? What are the targets for this year, especially with, your slew of launches coming out in the next 12 months?
So we are looking at around 500 to 750 buses in the coming year and maybe about 1,500 LCVs, but we will shortly then be ramping up capacities. The eventual idea is to have capacity of between 2,000 to 3,000 buses per year and between 6,000 to 10,000 LCVs per year.
Right. So not giving me any numbers there in terms of what you expect to see?
So the numbers will look good. If we are able to achieve these targets, we are looking at anywhere between 500 and 750 crores in the next 7 months to 10 months.
All right. And, Eka is also one of the commercial vehicle manufacturers that got approved under the government of India's auto PLI policy, right? Can you talk to us about the kind of impact you're seeing due to this?
Sure. So we have been investing a lot in R&D, and we probably have one of the largest EV R&D facilities in Pune. We have more than 300 people, and we are very proud to say that all of our products are not only manufactured in India, but designed out of India. And as I mentioned, not only for the Indian markets, but also for global markets. The PLI scheme is certainly a very strong scheme, which gives impetus for us in terms of market entry, but we are in the process of now working out the details. Once the products are launched, then we will apply for the necessary certifications under the PLI scheme, and hopefully that will give us some more impetus for not only for India, but also for exports.
Right. And if you could quickly tell us, exports, as you've been saying as well, is also a big part of your business, and you're going to use the funds to expand your exports business. Can you elaborate on what the plans are on the export side of the business and what's currently happening there?
Sure. So we have already started activities for looking at markets like Africa. A lot of countries in Africa are moving to electric mobility. And today, possibly China is the only game in town as far as those countries are concerned. They're looking for alternative solutions. For the past 1 year, we've been doing a lot of market research on the requirements of the market and have started development of products which will then go from India to Africa. Our eventual intention also is to have our concept of micro factories where we assemble electric vehicles not only in India, but in Africa and many of the other value markets around the world.
All right, lots of exciting plans there. Sudhir, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on your journey going forward.